Welcome to Option Trades Today. I'm Tony the Baptiste, and I have a trade idea for you today, January 9th, 2024. And this comes from some emails that I received from people who watch the podcast and also watch our show at tastylive.com. They want me to use a trade that uses less buying power than I've been using in a high-price stock. So let's take a look at that. But first, let's take a look at what the market is doing. E-mini S&Ps are down $13.75. That's about as high as I have seen them all morning. You can see here that the high on the E-mini S&Ps is about $10 higher than where they are right now, but they were significantly lower earlier today. Volatility /VX. That's the volatility I like to look at. That's the volatility future. I do not look at VIX. I find it a very confusing metrics. /VX is really the daily volatility, and you can see it's down 23 cents, 1.5%, even with the market lower. And you all know, typically, when the market goes lower, volatility goes higher. And when the volatility goes higher, the market usually goes lower. It's really acting weird, at least in my mind, showing a little bit of strength to this overall market. Take it for what it's worth. NASDAQ down 24, Russell down 21, Dow down 227. You can see here that the Russell is the weakest of the group. It also has the highest IV rank of the E-mini S&Ps, the NASDAQ, and IWM, which would be the Russell. That's also a little bit odd because the NASDAQ usually has the highest volatility and the highest IV rank. The NASDAQ has an IV rank of 11. Keep your eye on volatility, I guess is the point I'm trying to make. When you see volatility start to uptick, and maybe the market not going down, maybe this up move is coming to a small end. That would be my tell on this whole thing. But I promised you I would take a look at a stock that has a high IV rank, a stock that also has expanding volatility and is high priced, to answer the email from everyone that sent it to me. NVDA fits that bill. It has volatility expanding 1% here so far today over the last 5 days, that IVX 5-day change. But volatility is relatively low. The IV rank is 10. How would you trade a high-priced stock using a limited amount of capital that's been on a runaway train and you want to play a little bit of a contrarian role? Well, I definitely want to avoid earnings. Earnings are February 28th. So that is after the expiration of February, which is February 16th. You can see here the earnings are down here on February 28th. So how would I trade a stock like this using less than $2,000, have a high probability of success? Obviously, I'm going to have a defined risk trade. For me, that goes to a broken wing butterfly or a ratio spread, buying a wing, whatever you want to call it. It's exactly the same thing. As a matter of fact, I put this trade on when the stock was a little bit lower than here, so you might be able to put this on at a better price than I did. If you're omnidirectional, slightly bearish on NVIDIA, let's take a look at what NVIDIA has been doing. As you can see here, NVIDIA has been on a tear to the upside, overperforming to the market, overperforming to the NASDAQ, which you can see here. The NASDAQ is not making new highs that it made near the end of the year. NVIDIA has been the one that has driven this market. We're keeping this market higher. So my assumption is that maybe even if the market does continue to rally, NVIDIA will underperform relative to the market. Hey, that's my assumption. If your assumption is different, this is not the trade for you, but you might like the process just the same. What am I looking to do? I'm looking to go to around a standard deviation. Now, you only have 38 days to February expiration. A lot of times people will say, why don't you go into the 45-day options, which you could go into in the weeklies. And in NVIDIA, the markets, as you can see here, aren't that bad, 40 cents wide, 50 cents wide. You certainly could. If I look at the volume here, I'm assuming, and I have not looked at this, you will see some volume, which you do. It's good. You could go into the 45-day in this scenario. I am not. I'm going to stay in the monthly options. It's what I like to do. Again, take what I do maybe what I've found that works for me, and then tweak it and make it your own. There's no wrong answer here. You will see that the markets here are a nickel wide, 10 cents wide, 5 cents wide, much better markets. For me, I want to control entry because it's the only thing I can control. And by controlling entry, what I'm doing here is I'm then allowing myself to get in at an advantageous price, meaning a fair price, and get out at the same price. When you have wide markets in these option series, it takes a little bit more work to get out of them, giving up a little bit more edge. All right, what am I looking to do here? When I'm doing a broken wing butterfly, I like to hang around that 80 to 90% probability of success. So I'm going to buy one of the 580 calls. I'm going to sell two of the 590 calls. Now I have an IRA account up here just to show you how much buying power it would use to put on a trade like this. It's $45,000. In a margin account, it's going to be much less than that. Let's just call it $5,000. I'm just doing some quick math in my head. So I want to use less buying power because that's what the person wanted to use. And plus, you want to know something? You know, the IV rank doesn't warrant a naked trade in here. And plus, $500 stock is way too expensive. Plus, the stock has been on a tear and it's been on a runaway. So I don't want to have any naked units out there. So usually what I do is a classic butterfly, 580, 590, $10 wide. You'd go up to the 600 strike. Now here you could put on a trade that only uses $32. That's $32. You can see right here the buying power effect by buying that wing. You'll notice that the pop is only 7%. I like to have the opposite. I'd rather have a 93% pop and take on some risk than having a 7% pop and really having a pin at 590 where I could make $1,000 on this trade. You can see here the profit is 963. Right at a standard deviation, which is that dotted line, to me doesn't seem to be a great trade. So what I like to do is, if I'm buying a $10 wide spread, I like to double that and sell a $20 wide spread. So here you'll notice that my green line is right at the 600 strike. Which means that my break even is right at the 600 strike, $600.70 because of the credit I'm receiving. I'm using $933 here. This would be a trade that I would put on. This would be a trade that I like. This would be a classic broken wing butterfly. We're risking two, this $20 wide, to make one, this $10 wide, with our break even up at a 86% pop. I'm going to take on just a little bit more risk. I'm fine with this trade. If you were going to put on a trade like this, you probably get filled around 72, 73, maybe even 75 cents if you get an uptick in the market. But I'm going to widen it out, take a little bit more risk. I'm going to widen it out and use just about $1,400 worth of risk. I actually got filled on this trade at 99 cents. I put this trade on, I told you, when the stock was up around $5.20. It's rallied about 80 cents to $1 here. And you can see here that this has expanded too. I would expect you to be able to get filled if the stock is trading here with this implied volatility around $1.15, which it just moved to for the mid price right now. I got filled at 99 cents. Now, I also was asked, you can see my break even is right around the same price here. If you were to get filled at 99 cents, my break even would be, $600.99. It's basically the same probability of success, 86 versus 86 on the last trade that I showed you, which is using a little bit less buying power, but I have a chance to make a little bit more money on this trade. What am I looking to make on this trade? Well, on that $1,300 worth of risk, I'm really looking to make about 50 to 75 cents. But man, if NVIDIA keeps rallying the way it is, you certainly could make a couple of more dollars. Maybe you can widen this out to $15 by $30 if you want to. You have to play with it yourself, like what you want to do for your risk parameters. And again, this does have a small short delta. You'll notice that it's 3 short shares of NVIDIA trading a $529 stock with only using $1,300 in buying power. I was asked to show this on the Analyze tab or Analysis tab, so I'm going to do that for you right now. I'm going to click on the curve view here, and you can see here that this is where the the kind of risk graph of this trade. It's a defined risk trade, obviously, at the buying power effect. And you can see here, your buying power effect is exactly the same. You're looking here on how much money you could make on this trade. These numbers doubled because I think I have a one lot in this account already. You're buying the 580s, selling the 590s 2 times, buying the 615s. Maybe if I erase this, it'll come up there. There you go. There's the trade that I'm looking at. Your expiration, you're looking at around $1,400. Anywhere up here, that's your max loss. Here's your max profit on this trade. Sitting right here at expiration, you're going to make yourself $1,000. And if it closes anywhere below, as signified by this green line, you make the credit that you receive. So there's a trade that you could make almost $1,000 on if you get the perfect strike, which I think is unreasonable to ask for. But you have a high probability of success, 85%, and the higher the stock goes, obviously, the more credit this is going to be able to receive. And as the stock settles in, that credit will start to diminish, and that's where we make our profit. Or the stock goes right up to our short strike in the next 38 days, and we make ourselves $1,000. Highly unlikely and not the scenario you want. But that's why we call this an omni-directional trade, where you get to make money if the stock goes lower, stock goes higher, or if the stock just sits. All right, you know what I don't want you to do? I don't want you to sit in the brokerage firm you're with right now. Please transfer your account to Tasty Trade, the best brokerage firm in the galaxy, and take advantage of some of those sweet perks that we have. We're giving away cash for you bringing your account to Tasty Trade.